Hey guys, it's Brandon here. So we're going to talk specifically about what I think you should invest in. When it comes to investment, there are just so many different options and things that you can get into out there. There's this whole wide spectrum of different kinds of investments you can get in. Of course, you can get into money, like you can physically go get bills, you can go buy silver. There's just so much different stuff that you can invest in, and especially when it comes to stock, which this is a stock course. And in stock, those kinds of financial investments where you're not buying a physical property, you're not buying physical silver, there's so much as the way of options. I'm going to switch this screen real quick. Today we'll be talking mostly about exchange-traded funds. But when it comes down to it, there's just this huge risk profile. There's all these different options. And if you would talk to a established investor, like an older person, my grandma was one of them, they would tell you time and time again, you need to buy yourself CDs or certificates of deposits. That's where you give essentially a bank some money and they loan it out to people who are buying houses or they're buying a car or whatever it is. They use that money to operate as the bank. They act as a middleman, and you get some earnings, you get some return on that investment. I'm going to switch my screen again, and I'm going to show you guys what the CDs go for right now on bankrate.com. This is what I would say is the least risky thing you can do. It's 0.5% in interest a year, not a month, a year. This is their sponsored result, 0.5%. We'll scroll down. Brio Direct, 3-month CD, meaning with these CDs, you have to keep them in the bank or the institution for 3 months. It's 0.5%. Let's look at the best 5-year CD rate, a whopping 1.25%. That is less than inflation. I don't know why any human being would do those right now. I run into older people, and we'll do a segment, I'm sure, at some point on those people's money. But they think that that's a good return, and they give banks millions, billions of dollars are sitting right now in CDs earning 1.25% interest. And it's insane to me. The next step up, which I've actually got I think I've got a little bit in here, we'll switch the screen real quick, are bonds. It's where you're not loaning money to a bank, but most of the time you're either loaning money to a corporation or you're loaning it to a municipality like a city, and they use that money, the bond money, to buy a bridge or build a road, or you can loan money effectively to a school district to build a school. And typically those kinds of entities pay a lot more money than a bank because the bank's not acting as a middleman. The middleman might be the fund that's giving the bond money. So we're going to type in municipal bonds ETF. Let's do that. And an ETF is an exchange traded fund, and all it does is it compiles a bunch of investors on the stock market into a fund. It pulls your money together and you go into it. So here are these different bonds. Let's see. This one here up at the top, I'll show you guys what I'm looking at. This one here at the top has $20 billion worth of assets. That's cool. Then here's a Vanguard tax-exempt bond fund. And bonds are something that they're not terrible. I have a little bit of money. I think my kids have money in bonds right now. Some of these investments in bonds are tax-exempt because you're giving money to some charitable organization, government organization, and the federal government says, hey, you don't have to pay taxes on it. But we'd have to look at these bond rates and what they return. But I see a lot of municipal bonds, and they're returning in the range-ish of 2 to 3%. So you're going to make 2 to 3%. In some cases, it's going to be tax-free. But once again, inflation in the United States is about 2 to 3% a year. Let's say 2%. If you are not making more than 2% per year, you're actually losing money having the money invested in something. So enter in to exchange-traded funds, where there's some computer algorithm. It's not some guy sitting in a computer trading stocks for you. but there's a computer, it's algorithmic, and they just buy and sell the stocks for you. And my favorite one right here is VOO. It's the Vanguard S&P 500 ETF. We'll switch the screen again. I'm going to show you guys my actual M1 Finance account. And if you guys remember, the reason I do the stock course is if you sign up to like M1 or Weibo or whatever, I get a little cut off of it, and I use that money to finance shows for stock investing. And I personally use, I personally am using these accounts. I'm personally using this stock and all this different stuff to try and hopefully educate and motivate you guys. So here is my actual real deal account with M1 Finance. This is how much I have. I have $12,302 right now at this very second. And if I've refreshed the screen, I think it'll actually update it. And we should see a little change in value because that price is inflating and deflating. So as of today, I've lost $48 on the Vanguard S&P 500. And when I say S&P 500, those are the 500 best companies as defined by Standard & Poor's in the United States. So it's a broad range of 500 different stocks, and it's pretty dang cool. We're going to go to 1 week view. Did I lose or make money over the week? I've earned 2.25%. That's more than a CD earns in a year, made it in a week. So for me, ETFs, especially like the S&P 500, or we'll click on another one here in a second, it's called VTI. It's the total stock market. It's all stocks on the market. Those, to me, have the best mix of return, and they have the best mix of risk mitigation, meaning they're not super high risk. So this is the Vanguard S&P 500, and there will be a link, I'm sure, somewhere that you guys can look at my actual stock account, see everything I own. But we'll go here to a 1 year period. I have made 27.67% since I started buying stock in May 15th, 2020. Today, very specifically, is January the 22nd, 2021. So less than a year, I've earned over 27.67%. So the stock market is in a weird place in the fact that it's going up due to the government throwing tons of money at the market. But even if this was a normal year without coronavirus, without all this craziness, it would still have been a really good choice to have S&P 500 stock. So we're back on my primary portfolio view, and I'm going to click on VTI. This is a stock here where it buys shares in all the companies in the United States. And I've had this one since the same time. And it's in less than a year, it's 36.01%. These, like I said again, I'm putting all my money in the stock market that comes off my YouTube earnings. I'm putting a lot of my real estate income, and it's just sitting there as opposed to a bank account. We're going to click out to the main view because in the course of, I'm going to have to try and figure out how to fix this. Okay. In the course of less than 1 year period, I'm up 56.55%. Meaning if you had $100,000 in your bank account and instead you had it here in an M1 account and you did the similar things I did, you'd be up 56.55%. So, suffice to say, I would put some money in VTI and VOO specifically. Now, if you get on the internet and you start reading YouTube personalities, and I don't want to dig against anybody because there's so many nice people out there that are in the YouTube community and they're in these different things trying to teach and educate. There's a lot of people that are telling you to buy individual stocks. And the nice thing is with M1, you can buy about 100 different individual stocks. I know you can do more than that. You can buy a bunch of different stocks, and we'll do like the nitty gritty on how to open up an M1 account. I'll bring my brother here to the office, and we'll just open up an M1 account. We'll fund it live on video, so I can walk you guys through that process if you feel confused right at this second. So that's something we will do here very soon on the next segment or two for this stock course. But I wanted to get this video off to you guys today so you could see exactly what I'm putting my money in. But we'll go back in here to my stock view and we'll click on Tesla because I've done so well off Tesla. I've been in Tesla since 2013, which is like forever and a day. I bought it originally at $125 per share stock, and now Tesla is $834. We multiply that by 4. Let's see. 4 times, because they had a 4-to-1 split, 4 times 800 834 is 3,336. So I've on my original Tesla stock, I've 30x'd my return. I've had an increase of 30 times, so 3,000% as opposed to this 373%. Now, there's people out there that have put all their money in Tesla. And would you have done really well this year? Yes, you would have. But that kind of foresight to know that Tesla was going to explode like that's almost impossible. So if I was new, I would not recommend that you get into individual stocks or put all my money in one thing, other than maybe a large, broad ETF, because an ETF is buying you hundreds of different companies or thousands of different companies. And then I just kind of segment my money on that. And that's what I would do if I was new, because over the course of the year, like I said, on the Vanguard S&P 500 and VTI, VOO, VTI, those specific stocks, if I would have put 50% in each of one of those, I would have ended up between 30 and 32% gains. Now, here's the secret with my investment account. If you notice my videos, this account right at this second has $80,975 in it. Well, if you watch prior videos, I had a little over $110,000. So I've spent $30,000 out of my account here recently. What did I do? I bought a company. I bought a company that's bringing in over $200,000 per year. And I used $30,000 from my stock investment account to fund the purchase of a business. And that's why I want you guys to invest in stock. So far, over my entire lifetime of this specific portfolio, this specific M1 portfolio, and this is what I use to teach everybody with. I've also got a Webull portfolio. I've got a Robinhood portfolio. I've got a public.com portfolio. And I've got a Coinbase one too. So any of this stuff I'm telling you, we're going to go into my accounts. But since May, of the money I've invested, I've made $42,728. Almost enough to completely fund this business. Well, actually more than enough to fund the business. It's $20,000 is what I used to buy this company, and then I set another $10,000 aside for upgrades and stuff like that. So in 1 year, I have made enough money in the stock market to fund the purchase of an expansion company that's bringing in $200,000 gross, $70K net. That's how much it profits a year off the $200,000 in sales. I'll also effectively spend $6,000 out of my pocket. And I don't think that I'm doing anything here that's nuts. I don't think that I'm doing anything that's uncommon, because if you would start saving your money over the course of time, you'd have $100,000 in your stock portfolio too. And I think that if you guys would buy ETFs very specifically, which are lower risk than individual stocks, you would see your money grow over the course of time. You would see returns. You would see your money grow a little bit every month, every week. You would see truly some growth, and that would give you guys the encouragement and the desire maybe to expand and build a business. A lot of people out there, they don't have any interest in owning a business or real estate. That's fine. At least you're doing something. So thank you guys for watching this segment on ETFs. Once again, if you can either email me, you can text me, you can put a comment on any of those videos, and I'll respond to them or read them, and I'll integrate them in the next video if I didn't explain something. So thank you guys for watching. Make sure you respond. You don't have to like this one because it's not public, but just let me know if there's anything that wasn't clear here or another way that I could help you guys regarding stocks. Thanks for watching, guys.